Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on Palantir, ticker symbol PLTR. For today's analysis on Palantir, I'm going to give my price target, look at 2021 Q1 results. I'm going to give a brief business description. We're going to look at the fundamentals / financials of Palantir. I'm going to look at a stock price history of Palantir, see any insight we can gain there. We're going to look at the price performance versus the industry / peers. And then lastly, I'm going to give my thoughts on how I'm approaching Palantir from an investment perspective. If you're new to my channel, please consider subscribing. I do videos on personal finance, investing, and stock analysis such as this one. So check out some others, see if you like it, and consider subscribing. Next, if you like the video at any point, please like the video. Now back to the content. So my price target for Palantir is $23 a share. Now, full disclosure, I currently don't own any Palantir. And you may think, well, the price right now is lower than that $23 price target. Why aren't you buying? Well, right now, I think there's a lot of volatility with Palantir. And so just from a risk perspective, I think there is a lot of risk with investing in this name currently. I think there's a lot of buzz and hype around the name. So until that starts to die down and I feel like there's a little less volatility or the price goes, as I'll explain later into videos, to a certain point, I'll probably consider purchasing some Palantir stock. All right, so I just got off the Q1 2021 earnings call for Palantir. If we look at the results, adjusted earnings per share was at 4 cents. Earnings per share estimates by the analyst was at 4 cents, so that was in line with estimates. Looking at revenue, they were able to beat here, coming in at $341 million for the quarter at estimates of $332 million. So they beat by about $8.92 million. Moving on to other key events that we're looking at. So Palantir is priced for growth, so we need to look at what happened in the growth. Palantir forecasted for the quarter that they would have 45% growth. That actually came in 49% year over year, so a good checkbox there. Looking at their forecasted adjusted operating margin of 23%, they beat that and got around 34%. You can see the revenue, the numbers here, as well as the cost of revenue, stayed fairly healthy, so that margin grew quite nicely. Now, looking at other key takeaways, U.S. revenue growth was up 81%, with U.S. government growth up 76%. So again, that government growth was a large percentage of the growth in the quarter. So we'll look for that probably to be the key growth driver in the U.S. moving forward. Next up, let's look at some other key takeaways. And some of these are a little negative here, so just bear with me. We look at Q2 estimates. Again, they beat that revenue growth by 43%. The thing here that I thought was interesting was the operating margin for Q2 was in line with their previous estimates of 23%. Revenue growth was below their original estimate for Q1 at 45%, so it's at 43 here. So I think that's interesting that they're guiding down for Q2. Looking at the full year, they're suggesting free cash flow of $150 million for the full year. Now, if you look at that as a multiple of their current market cap, that's over 200, free cash flow to price to free cash flow. So quite a really high ratio there for the price to free cash flow. If you look at the revenue growth over the rest of this year, they're anticipating over 30%. So we're going from 45% for Q1, 43% for Q2. How are they going to get revenue growth to 33? What are they going to get? 10% for the remaining 2 quarters? That's not good in my opinion. So, and then the last thing, when I was listening to the call, I heard one quote that particularly does bother me, and maybe not most people, but bothers me. They said, "We are not focused on profitability. We are focused on growth." I understand the sentiment behind that. I understand that they're trying to grow the company, but you do need to be profitable in order to return value to shareholders. Again, with that free cash flow being so low to their market cap, it definitely has a lot of risk associated with the stock, and I'll go further into that throughout the rest of this analysis. Palantir is in the business of analytics and big data. Right now, their client mix is split 50-50 between government and commercial. Their revenue sources are 40% US based and 60% international. They have 3 products right now: Gotham, Foundry, and Apollo. Their strategy on getting these products to their clients is first acquire the client, expand to give them more services, and scale. This is really where they're starting to actually make money with the client. So again, in the first 2 phases of their strategy, they're really not focused on so much as margin and growth. They're really just trying to get that client, give them value, and then they focus on scaling the margin up in the third phase. Now, they were founded in 2003, so they've been around for almost 2 decades, and their IPO date when they went public was September 30th, so they've been around for about 7 months now. All right, moving into the financials of Palantir. If we look at total revenue between the end of 2018 to 2020, we can see it grew from $595 million to $1.09 billion. So pretty healthy there. Between 18 and 19, it was a 24% increase year over year, and then a 47% from 2019 to 2020. Now, as I mentioned earlier on, growth is super critical here. So if we don't see an increase in growth around what they're expecting, around 45%, I think we're going to have a hard time with their valuation compared to their total revenue. So that growth is critical moving forward, and is probably one of the biggest indicators of how their stock should be valued at this current time. We look at gross profit. It's a pretty solid margin there at 67%. So that's a good thing to see. When I look at their EBITDA and net income at losses, I hate seeing a company to losing money, but the way valuations are happening right now with net income and EBITDA on these companies that have high growth potential is people basically ignore it. They're like, they're a growth. You really got to look at future revenues. And that's true to an extent. If this continues and they don't get profitability in the next, I would say 2 to 3 years, I would be highly concerned. Or if those revenues aren't continue to grow like they're expected to. So again, this company is being priced in at high growth. We need to be watching for growth and that growth on the top line in the revenue side. Next up, I want to talk about Palantir's price history since their IPO. Now, if you bought in right at the beginning, you went all the way up to $39 and had almost a 300% gain there, a gain on paper. If you continue to hold down to today at $19.75, you're still up 100%. So you're still probably a happy investor with Palantir. Now, since they dropped back in mid-February into the $20 to $25 range, I kind of drew I drew one line of around $21.75. So you can see in between that mid-February drop and current today, there were several times where the stock price would go and try to get close to that $21 line, and then it would pop back up. It popped back up. And so it did that about 4 times before it finally broke that resistance line, and it's still trading down. So again, I don't know if it's going to continue to trend down that way. I think earnings could send it in the opposite direction and continue to go back up. Just depends on how growth is projected, how revenue comes in, as well as if the CEO says anything positive or negative, or it might even something neutral could cause this stock to go down further. So just wanted to show this and give my opinion on their history. Next up, let's look at Palantir's price performance over the last 6 months. First, we're going to compare it to the SPY. SPY is a S&P 500 index fund. It's up 20% for the last 6 months. If we look at Palantir, it's up 42% for the last 6 months. So again, both those returns are extraordinary. So that's awesome. The thing I wanted to look at was a comparison to another stock that recently IPO'd that's in the same type of space, analytics. C3.ai is more on the AI side of the analytics, but again, they both have a high valuation as compared to their revenue. So I thought they were pretty similar, and I wanted to just give the comparison. So C3.ai is down 39% since this whole time period. C3.ai is also down 65% from their all-time highs. Palantir just so happens to be down 50% from their all-time highs. Thing about Palantir is I know this isn't a great example, and it's just really a what if scenario, but what if Palantir dropped from 65% from their all-time high, which was $39? That would place their price at $14 a share if they dropped 65% from their all-time high. If we just compared them as to how C3.ai's stock performed since their all-time high. Now, again, it's probably not realistic. It's probably not going to happen. But again, I thought it was a pretty good what if scenario, just put in people's minds to say, hey, it could happen. I don't know what the realisticness of it or probability, but I do see some significant downside risk in Palantir, especially because even stocks that are very similar to it are not performing nearly as well as it. All right, so last up, my thoughts on Palantir. Now, they hit their growth targets for the last quarter of Q1 of 2021. Full year guidance was down to 30% growth for the next 5 years. So, in my opinion, that's pretty disappointing. $150 million in free cash flow while they went from a negative to a positive. Still, it's extremely low free cash flow as a comparison of their multiple, which is 200, over 200, I think 220-ish. So that's crazy. Next up, significant downside risk just in this stock. I mean, even if it went down to about $14 a share, which is what we discussed with seeing around the pricing of C3.ai, I still think there could be some more significant downside risk further than that. So with all that being said, please approach with caution. This stock may go up. I do believe it's a hype stock. For me personally, it's just way too much risk. It could go either way. But just looking at the fundamentals on the stock, they're just not there to support the market cap, in that I think it's 30 something, 34 billion, $35 billion right now. And that's just too pricey of a multiple for me. And they really would have to hit their growth targets year over year over year and even past that 5 years. They're not even going to get close to where they need to be on the revenue side within 5 years to still justify the current valuation of the company. So just keep that in mind as you're investing. This stock may do well. Yes, they have good products, but they still have a lot to prove in order to justify their valuation. And another keynote I did take off their earnings call is, yes, they have a lot of people who are really good salespeople, justified by the people who are on those calls. They were very good at massaging words. And so last up, I just approach this stock with caution. Know what you're getting into. Know that there's definite risk here. So again, this is not a stock you're analyzing on the fundamentals. Most of the valuation of this stock is based off of what they believe is going to happen in the future, which has to execute almost perfectly in order to justify the current valuation. So please consider subscribing to my channel. Like the video if you find any of it helpful or if you agree. Let me know it in the comments. If you disagree, I'm totally fine with that. I'd love to have a conversation with you down in the comments. Frank Finance, out.